Hello and welcome to Global Business Africa as we bring you insights of Africa's ever-changing business landscape. From Nairobi to Johannesburg, from Cairo to Lagos, we will be bringing you stories that are making business headlines tonight. I'm Penny Nakariba live in the Kenyan capital, Nairobi. It is 9 p.m. here in East Africa. Wherever you're joining us from, welcome to the show. Coming up tonight, the Nigerian Naira hits a new record low. We'll look at the options for Africa's largest economy. Wheat farmers in Egypt call for government intervention to boost production. And later on, we meet a 30-year-old Kenyan entrepreneur whose business is all ripe for listing at the Nairobi Bulls. Nigeria's Naira rose sharply against the dollar on Tuesday after the central bank intervened 3 times to lift it from yet another record intraday low. The Naira closed at 181 against the dollar, up 3.6% from its early session low of 187.55 Naira. The unit closed at 184.10 on Monday. The central bank, which devalued the currency by 8% last week, has been struggling to keep the Naira trading within its new band of 160 to 176 Naira to the dollar as oil prices stay persistently weak around 5-year lows. The Naira has lost 12.3% this year. Dealers said all companies were also selling dollars and some banks were buying Naira ahead of a Wednesday's Treasury bill auction. Nigeria has been a victim of free-falling world oil prices that have dealt a blow to African oil producers. Besides the spiraling inflation in Africa's #1 economy, the populous West African country is facing tough choices ahead of next year's general elections as oil prices plunge to $70 a barrel and many businesses in the country begin to hurt. Analysts say that the country is over-reliant on imports and cite its position as the world's largest producer of staple foods as cassava, yam and cowpea, yet imports large amounts of wheat, rice, livestock products and fish. The Naira, as a result, is left extremely volatile. Some Nigerians have been quoted wishing that crude oil in Nigeria should run dry so that the government starts to actually be a government.
Devaluation definitely have a negative impact on my business. One, my portfolio have been reduced in terms of volume. Normally, we assess funds in different form. We buy from the CBN, we buy from the commercial banks, and we buy from the working customers. One, even before the devaluation, the CBN have drastically reduced my allocation weekly from $50,000 to $15,000. The statement already have put a lot of speculation in the market.
We need to diversify to things we can manage. We need to diversify our economy so much that we're getting revenue from a lot of streams, not just crude oil. We need to, agriculture has been contributing close to 40% of GDP for the last 10 years. But the amounts we put in the budget allocation to agriculture is less than 10%.
All right, so let's discuss this further. Mariam Bimad is in London and joins us live from there. Mariam, how are investors now viewing Nigeria, especially with growing concerns over the weak Naira and its foreign exchange reserves?
Well, you know, investors are worried about what the Nigerian government plans to do to tackle its risk exposure, given that we didn't see a resolution at the OPEC meeting last week. The decision to keep production as is at about 3 to 3.5 million barrels per day means allowing oil prices to keep falling. This is, of course, bad news for Nigeria, which already has austerity measures in place and devalued the Naira. So where do we go from here, really, is the question. The lack of international demand for oil is weighing on both crude prices, down 37%, and Nigeria's economy, with investors worried over uncertainty. And pressure on the Naira also could trigger inflation, which, of course, has stabilized in the last 2 years after years of struggle. So now that the central bank failed to help the Naira after selling an undisclosed amount of dollars to commercial banks, it's still closed down to 0.9% weaker and 4.4% below the lower end of the bank's target.
So, Mariam, the central bank failed to keep the naira within its new target band this week. What's the next step? I mean, how much further will the low oil prices impact Africa's top producer?
Well, you know, it's hard for many experts to say how far the central bank really needs to go. Some experts told me that, you know, Nigeria miscalculated essentially oil prices this year by a wide margin and is now paying the price, if you will. This will impact revenues at a time when President Goodluck Jonathan is very much facing re-election. The government will also have to take on more spending cuts on a new average of about, you know, for oil prices of about $73 a barrel to make up that difference, but even that is considered too optimistic. Let's not forget that Nigeria's oil savings were already under pressure back when crude prices were at a record high, and investors agree with analysts that the coming weeks will test the central bank's ability to maintain new targets as forex reserves very much dry up.
All right, Mariam, thanks very much for those insights. Mariam Bamad live in London. It has not been all loss as far as falling oil prices are concerned. FastJet, the UK-based budget airline operating in Southern Africa, says low oil prices are delivering a substantial cash benefit to the company that is likely to extend into next year. The announcement sent its share price higher on Tuesday. The airline has struggled to match rock-bottom prices offered by competitors on domestic flights in Tanzania. Oil has fallen by more than a third since June, reaching its lowest in more than 5 years on Monday. FastJet Chief Executive Ed Winter said fuel represents about 40% of FastJet's operating costs. So let's move to Egypt now. Farmers responsible for feeding the nation, wheat farmers, say government intervention in the sector is not helping boost their crop production. It's at a fixed price and local wheat in order to help local farmers. According to statistics, wheat production in the country has grown steadily and was highest in the winter of 2013. The country imports about 10 million metric tons of wheat a year, half of its annual consumption.
Egypt is still the world's largest importer of wheat, and while local production has grown steadily in recent years, not enough is being produced to feed the country yet. In an effort to boost local farmers, government raised the fixed price for local wheat to $58 from $55, with the aim of encouraging farmers and lessening the reliance on imports. But farmers say they aren't reaping the benefits.
The price of each ardeb is only £400, which is cheaper than the expenditures of growing. We are putting our hard efforts in farming, and we are paying so much money to hire fields, fertilizers, pesticides and harvesters. But we get cheap money from domestic selling after all we spend.
Just last month, the Egyptian government bought 2.5 million tons of wheat from local farmers. Typically, it buys 3.6 million tons a year. It hopes to boost local wheat production this way and so enable the country to become self-sufficient and cut its $5 billion food import bill. But experts question the support government is giving to small farmers.
I need to understand what the role of the government is. Where are the guidance centers? It should support the farmers and provide them with a proper time for cultivation and growing, which helps them get the best productivity.
The country still buys around 10 million tons of wheat from abroad. This is due to the fact that local wheat production is hampered by several factors, including storage, and mainly peasant farmers who reserve a significant portion of their crops for their families. Valdi Karolse, CCTV.
Another credit rating downgrade for South Africa isn't likely. That's according to the country's Reserve Bank Governor, Lesetja Kganyago. Last month, Moody's downgraded the government's sovereign credit rating by 1 notch to Baa2, but changed its outlook to stable from negative. It cited poor prospects for medium-term growth and rising public debt for the downgrade. Speaking at the bank's Monetary Policy Forum, Kganyago highlighted the government's commitment to keeping spending under control as one of the factors that would avert further downgrades. The bank is forecasting growth of 2.5% next year. The Ebola outbreak in West Africa is taking a heavy toll on the economies of Liberia, Sierra Leone and Guinea, all of which face negative or slower growth next year because of the virus. That's according to the World Bank. Now, the bank said growth estimates for the three countries hardest hit by Ebola had tumbled since its previous analysis in October. Projections shows the outbreak will cost them more than $2 billion in lost income over the next year. The report comes as the World Bank Group's president Jim Yong Kim begins a two-day visit to West Africa to discuss ways of addressing the outbreak. Well, let's get more now from Angelo Coppola. He joins us live from Monrovia. Angelo, you've been there for about 2 days. What's the scale of Ebola in Liberia? What have you seen?
Well, we've been stationed in Monrovia for the last 2 days just to get a sense of what's happening on a political level and interacting with many of the government ministers and senior officials in the aid agencies. On the streets, it seems all is calm, almost as if nothing's happening. We're watching people going about their daily business. We're watching people doing things that they would normally be doing. The only difference is that we have these large Ebola treatment units which have sprung up. The Chinese, USAID, we have the UN, who've put up very high walls, lots of security, and as if they're hiding things from the population. Although we do know that there aren't many patients in these Ebola units at the moment, and hopefully it will remain like that. Nina?
Angelo, the World Bank's updated 2015 growth, the estimate for Liberia is 3%, which is less than half the pre-crisis estimate of 6.8%. Beyond these figures, just how bad is the economy affected? Give us a picture of what the effects on the people are.
Well, we've been walking the streets of the capital today, and it's quite interesting. It's fairly subdued, but it's business as usual as far as we can tell. People are walking, they're selling their wares, the hawkers are selling their goods, the taxis are busy and moving around, and people trying to get customers inside of their taxis, and they're actually having what seems to be a normal business interaction. As you can hear, there's lots of activity here as people start moving home. So it does appear as if...
Well, I'm afraid we've lost Angelo. We've got problems with his connection. But just getting a picture of how it's like there in Liberia, of course, given the statistics we got from the World Bank on the projected growth of the economy. Well, let's have a look now at the markets. And all price bounce didn't help Nigeria's stock market much, with the Naira dropping for a third straight session to a new record low after the central bank's intervention failed to keep the currency within its new devalue target range. Nigeria's all-share index fell 1.8% today, extending a drop of almost 18% this year. You're on Global Business. Still ahead, the Shipibouro manganese mine opens in South Africa's Kalahari fields. And Zimbabwe bets on the postal network to bridge the technological divide between urban centers and marginalized communities.
Sustainable development and a commitment to developing partnerships with Africa. Some of the key phrases already used at the Africa Global Business Forum here in Dubai.
There is a need for a predictable environment in which investors have to put their money.
You're watching Global Business. Welcome back. The Kalahari manganese fields, among one of the world's biggest and richest, has a relative newcomer, the new Shipibouro mine owned by Shipi Manganese Mining. With a 60-year mine life and a 2.4 million ton per annum capacity, Shipi will be among the 4 largest South African sources of manganese, an irreplaceable ingredient in the manufacture of steel. Julie Shire has more.
The Kalahari manganese fields, among one of the world's biggest and richest, has a relatively newcomer. The new Shipibouro mine, owned by Shipi Intel Manganese Mining, is now fully operational. With a 60-year mine life and a 2.4 million ton per annum capacity, Shipi will be among the 4 largest South African sources of manganese, an irreplaceable ingredient in the manufacture of steel.
What we think is very important about this new mine is that it is probably the last open-cast sustainable manganese mine in the world of that quality of manganese. And we think that in the long term it's going to be one of the significant low-cost producers of manganese, of quality manganese.
The open-cast mine has reached its full production this year, and all the mine's manganese 2 million ton production has been exported to China. But there are still challenges that lie ahead.
The challenge that we have is logistics, which we have had to improvise upon in order to make sure that we maximize the railing of the manganese to the port in Port Elizabeth and in Saldanha Bay, because that's one of the most significant constraints as well as a cost factor in mining manganese.
The new mine has boosted job creation. It now employs 400 people through permanent employment, contributing to business opportunities in the Northern Cape, one of South Africa's most impoverished provinces.
We're putting in bursaries and to make sure that we can develop local people in the skills that are required in the province. So it's very important for the regional economy as well.
Manganese exports from South Africa have in the last 5 years doubled from approximately 5 million tons to 10 million tons. And Tshipi's new mine is contributing to the country's figures, but it is also creating employment for local people, and its ore is being exported cost-effectively and efficiently internationally. Julie Shara, CCTV, Johannesburg.
Access to information is a major challenge that faces most rural communities on the continent. The lack of information hinders the growth and development of not only businesses, but individuals and communities. The government of Zimbabwe is aware of this challenge and is hoping to empower its citizens by rolling out community information centers to provide technological solutions to its people.
The government of Zimbabwe is using the postal network to bridge the technological divide between urban centers and marginalized communities. Community information centers are being established to ensure information dissemination is extended to remote and rural areas for socio-economic development of communities.
With the Communication Information Center, definitely from a business point of view, we are also trying to follow that market so that we are able still to benefit from the transactions that happen from there. But from a country point of view, the Communication Center will assist especially those marginalized communities that cannot afford their individual gadgets, be it a smartphone, be it a laptop, PC and that kind of thing. They will have access to our communication centers and they will be able to surf for different types of information.
The program will utilize the country's existing postal network and infrastructure to enable Zimbabweans to share information and for decision makers to link macroeconomic policy making to grassroots initiatives across the nation. The centers will ensure relevant information for agricultural production, education, healthcare, environmental management will be availed to remote areas and in all languages.
The beauty of the post office network is it's already done according to the various sectors. So in some communities, and that's the beauty of this, you can actually do the information according to the language and the post office that you're sending the information to. So it's not generic. We're not advocating for one message to be beamed and sent out to everybody. A radio announcement or a newspaper article assumes that everybody's going to be able to, distill that to their communication language. One can now speak in the language of the people, hear back from the people, and that's the power of this platform.
The community information centers will provide a one-stop ICT shops for communication and training services online, printing, laminating, scanning services, and many more. Project partners have donated a variety of materials. Huawei Technology donated 2 centers for the nationwide rollout.
As the Universal Postal Union, what we are advising our member countries is that they should also provide those means of communication that the customer is looking for. This is where we now bring in the issues of that postal infrastructure being ICT enabled.
Zimbabwe is a signatory to the 2013 Geneva Declaration, which advocated for equal technological support to all rural areas. With over 250 postal outlets nationwide, The program is expected to reach out to all corners of Zimbabwe, ensuring that most remote areas are up to date on all relevant information. Wazir Khamsin, CCTV.
On to commodity prices now. Brent oil fell below $72 a barrel on Tuesday, giving up some of its gains in the previous day's rally from 5-year lows as traders voiced uncertainty over whether the market had reached a floor or would keep falling. Now, oil has fallen since June to reach its lowest since October 2009 on Monday, as new supplies of high-quality light crude from North America overwhelmed demand, which in turn has suffered from slower economic growth in China and Europe. Still ahead, we meet a 30-year-old Kenyan entrepreneur whose business is all ripe for listing at the Nairobi Bulls. Welcome back to Global Business. From university hostel to a global empire. In a nutshell, that is the story of Kenyan James Mworia, the founder and chief executive of Empire Microsystems Limited. He formed the company 8 years ago at the age of 22. Today, his list of clients reads of the who's who in Kenya's telecommunications sector. The company has sought approval from Kenya's Capital Markets Authority and is on schedule to be listed before Christmas this year. James Mworia's story makes our grassroots segment today.
I'm the team leader at Empire Microsystems. I'm the CEO and managing director. Empire Microsystems is an IT company that started in 2006. I started it after clearing my undergraduate. I did the BSc, Bachelor of Science in Information Technology at Jomo Kenyatta University. I was very good in computing while doing my degree. I was very good in software development. So when I was given an opportunity to develop a system as my final year project, I did my very best to deliver the best system. And by virtue of that, it was voted the best system in the whole of Jomo Kenyatta University. And on top of that, I was awarded a first-class honors because of that. But I found myself with a good product that the outside world, which are the SACCOs, were looking for. They had tried to develop their own SACCO system and still had not cracked it. So when I came out from class, they offered me two things. Either I become their in-house developer, meaning they employ me so that they can take up my system, which I declined. I requested them to tell me exactly what kind of a system they are looking for. They described to me. Then I offered myself to develop the same system, now as a contractor. And that is how Empire Microsystems was born. After 2006 success, 2007 success, in 2008, having acquired a bigger working area and more resources in terms of HR resources and fleet of cars, we diversified into telecommunication services. And in the same year, in the 2008, that is when the fiber craze started. Fiber added in Kenya, and connectivity started to happen in buildings and in homes. Then in 2010, we got MTN on board to do the same thing. They outsourced their telecommunication services to us. In 2011, we continued with the same contract. In 2012, we got Safaricom. By then, they were launching their Safaricom business. They outsourced the same services to us, the last mile network, basically, to manage the last mile, which is the customer installations and support. That is countrywide. We were doing it countrywide. James Mworia is a character who believes in possibilities. And those impossibilities, I define them into two ways. I believe in reality distortion. I believe in radical thinking different, outside the norm. And one guy who inspires me in his way of thinking is the late Steve Jobs of Apple. To us, listing is part of our transformation process. To us, listing is part of our strategic decision that we have to make so that we can be able to transform Empire into a more credible, attractive organization that will be able to live beyond the founders. Our 5 years strategic plan defines some 5 key milestones that we need to achieve. Number 1 is that Empire, in terms of revenue generation, should be past 1 billion shillings worth of revenue generation. Number 2, that Empire should be playing not only in the Kenyan market, but in the East African region within the next 5 years. But if possible, then we can be able to achieve other regions. Then we need to grow the shareholders' value. We need to grow the shareholders' value by growing the value of the company, amongst other things. I would say Empire is more accidental than intentional. While I was still in school, I just thought, the student thought that if ever I wanted to work for a company, I would work for a company called what? Empire. But Empire means an empire. And that is what we are building. We are building an ICT empire that will go beyond Kenya, that will go beyond East Africa, and will serve the people of Africa.
Well, from presidents to celebrities and even your pets, snapping a selfie is becoming a daily part of our routines. It's no longer embarrassing to get caught snapping a selfie. In fact, some people are going the extra mile to look more attractive in their picture. And I'm not talking about the better lighting or finding the perfect background. Some are actually investing in plastic surgery to improve the way they look. Plastic surgeons say they've seen more patients come through their doors as the selfie becomes more popular. As a result, requests for eyelid lifts and nose jobs are soaring. So on to the currencies now. The Kenyan shilling hovered at 3-year lows on Tuesday after Al-Shabaab militants killed 36 people, putting pressure on the shilling because tourism is a key source of hard currency. At close of trade at 1300 GMT, the shilling was at 90.38 to the dollar. That's compared with Monday's close of 90.20, 90.30 after news of the overnight attack broke out. On Global Business tomorrow, Egypt was private sector partnerships in a new policy. And South Africa's economy shows signs of revival after a moribund start to the year when mining and manufacturing in the country was hit by a series of industry-wide strikes. And that's it for this edition of Global Business. Remember, you can send your feedback to globalbusinessafrica@cctv.com. You can visit our Facebook page, CCTV Africa. You can also stay in touch with Global Business on Twitter using the handle @CCTV News Africa. I am Penina Karibe. Thanks for watching.